Calculating share insurance is very easy using the share insurance estimator provided at mycreditunion.gov. This video will walk you through how to calculate insurance and the various ways that account ownership can impact how much is covered.
The specific example used is just one of the many ways that your deposits can be structured to maximize your coverage.
First, you will enter in the name of the credit union you have your funds at. Next, select the type of account you will be adding to the calculation. For this video, we are working with personal accounts. Now we're ready to begin adding details. The first question asks how the account is owned. To start with, we are going to choose single with no beneficiaries. We're going to tell a story of $1 million
and the journey to get it all insured.
Meet John Smith, who currently owns this account on his own, with no declared beneficiaries. We will enter John's information as the owner in the share estimator and indicate that he is living and also a member of the credit union. We'll give his account a name and input the balance of $1 million. Clicking Add to Report takes you to a summary of the information you've provided. To see if the funds are covered, you will click Calculate Coverage. Uh-oh, it looks like not all of the funds in John's account are covered. Because of the way John has his account set up, by himself with no beneficiaries, this account is insured for $250,000 only, leaving $750,000 out in the rain. Does that mean he needs to move $750,000 out of the credit union and start depositing elsewhere? Nope. There are some options available to him that will help increase his coverage. Let's look at the next ownership type, joint with no beneficiaries. We'll take John's account and we will add an owner, Jane Smith. Again, we'll indicate that Jane is living and a member of the credit union, and we'll update our report. To get the updated coverage, click Calculate Coverage again, and let's take a look. This increased the coverage to $500,000, but still doesn't cover the full million. Adding Jane onto the account brought an extra $250,000 in coverage for her portion of the funds. Adding that to John's $250,000 coverage gives a total coverage of $500,000, still leaving $500,000 uninsured. What else can they do to get these funds covered? Let's talk about adding beneficiaries to the account. John and Jane have 2 children, Jenny and Joey, that they will add as beneficiaries. Enter their name, indicate that they are a person, but note the other beneficiary types to choose from. You don't have to select an individual, and that they are living. Again, we'll update our report and get taken to the summary. Something that's important to note is that you will see Jenny and Joey's names listed under both John and Jane. This is because that means they bring $250,000 in insurance coverage to both John's portion of the funds and Jane's portion. Click Calculate and yes, the full $1 million is covered. Adding beneficiaries to an account that is held by multiple people adds those same beneficiaries to each individual. Jenny is a beneficiary of Jane and also a beneficiary of John. Adding beneficiaries onto an account does something else as well. The insurance coverage that John and Jane brought to the funds themselves now goes away, taken over by the insurance brought by their beneficiaries. So, Jenny brings $250,000 in coverage to Jane's portion of the funds, and also brings $250,000 in coverage to John's portion. The same goes for Joey's insurance coverage. Adding the individual coverages together, we can see that is how we get to the full $1 million balance being insured, leaving nothing out in the rain.